What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, we are going to talk about how you guys can use your ETH, well, not USDC, but yeah, you can use that too if you want, but your ETH and your Bitcoin, or quote unquote your assets, your HODL bags, to be able to loan against them and take advantage of them in DeFi. The reason why I'm making this video is a member of our Discord server asked and said, hey, I would like to see a video on this, how you can cover like what you can use and what are the goods, bads, pros, cons, etc. of using them in different protocols. So I'm going to shrink my face so you guys can see what's up. That's some juicy APYs on some Ample. If you guys don't know about that Ample. Like TLDR, guys, keep in mind the reason why these are so high is because the market size total borrowed is fully capped. So that's why it's so high. Basically, if you deposit it into the pool, you can't withdraw right now. So that's something to understand, but I'm not going to explain it in this video. Today in this video, we're going to talk about how you can use your ETH and your BTC to use as collateral to make bank. Well, actually have fun in DeFi. So here's a couple things you guys need to know. So right now we are going to use, well, Aave protocol, for example. Let's go ahead and look at the APRs on Wrapped Bitcoin. So right now this is 0.01%, and you can also get 1.29% APR. Not really anything. I mean, sure, you can also look into it like, hey, maybe I can deposit and just like earn nothing on it. I mean, it's up to you what you want to do. It really doesn't matter. What we're taking into consideration are the concepts of getting this loan. So my face just got phantomized. So let's go ahead and get this keep on top. So with Bitcoin, this is something you need to keep in mind. Right now, we can deposit into here. We can buy or borrow up to 70% of our value. Now, why is this important? Well, with 70% of the value, if you deposit, let's say, for example, you deposit one Bitcoin and it's worth $100,000, you can borrow $70,000. So you can actually use this Bitcoin anywhere you want in DeFi, and best part about it, it's tax-free. Why is that? Because you did not make a buy or a sell. It's literally a loan. So it's free money and you don't have taxes with it. Obviously, you need to talk to your accountant and confirm that with him, whatever, yada, yada, yada. You guys get the disclaimers. I'm not an accountant, not a financial advisor, not financial advice. I'm not a tax dude or tax accountant, whatever you call it. No, this is just like explaining it to you because you're not making a buy or a sell. Now, you have to keep in mind when you're borrowing here, you do have a APY. You can do a stable or you can do a variable. Like right now it's 0.35%, which is really low. However, if you think in the future it's going to be a lot more expensive to borrow Bitcoin, well then you can look at the stable one, which is a 3.5%. Now, that is something to keep in mind. Obviously, you make your decisions accordingly, whatever you guys want to do. But yeah, that's just TLDR on that. Now, this is the second thing you can do. Well, back when I was saying borrow Bitcoin, no, you borrow stable coins, not Bitcoin. And your stablecoin APY right now is actually 17%, not 0.35. I'm sorry, I was reading you the Bitcoin one. But the second thing you can do is you can borrow a stablecoin. So right now, I'm going to get rid of my face. Let's just go and bring it up here. The stablecoin APRs, depending on what you borrow, you can actually borrow some SUSD for a lower price, and you can use this to buy more Bitcoin or buy whatever you want, and it is actually a lower rate. So what you can do is you can buy this coin, and well, you can just say, yeah, I'm going to buy this coin and I'm going to use it in DeFi and stake it elsewhere. So you can earn, the reason why these yields are high is because people can earn interest elsewhere or a higher interest elsewhere by farming with them. That's why these rates are so high. Now, don't just sit and go on Ethereum for all the rates. You can actually go on different rates itself, like on, for example, on Polygon, the borrow rates are way lower. Like the borrow DAI is only 12% instead of like 23%. Now, they're actually really high right now on Polygon. Wow, what the snap? That's crazy. Crazy sauce. Same thing on Avalanche. Just see what the APRs are. So here's a strategy. What you can use is like this DAI here, right here. You're paying 3.97%. You can borrow it here. And then you can bring it over onto Polygon, deposit it here, and earn 8.91%. Yes, you got to go through the bridge process, and it's annoying. But basically, it's just free money, and you're earning just if you minus the amount that you have to pay and minus the amount that you have to pay from the amount that you're earning, that is the amount you're walking away with. So it's literally just free money. So you can actually deposit your Ethereum, your Bitcoin, and you can borrow stables against that and use that in DeFi anywhere that you want. Like literally, it's just like your money and free money. And when you're done with it, all you do is you repay your loan. Yes, it will have some interest on it. So hopefully you earn more money with that stable coin. And say you earned $100 more than what you deposited, you just repay the loan and you just got a free $100 for nothing. And you still have your Bitcoin. Obviously, as long as you didn't get liquidated and so on. And on top of that, you have some interest on the Bitcoin now. I know it's a measly interest rate, but say you got $1 billion worth of Bitcoin, probably love to get, well, a free $600,000 just for nothing. That's 0.06% for you. But hey, why not? Oh, I mean, $600,000 for kicks. I'll take it. I mean, dude, that's awesome. So, I mean, it's just free money for that. And then obviously whatever you earned in DeFi. And you can also use other protocols like Geese Finance. Geese Finance pays very well. It actually used to pay way better. But keep in mind, you need to understand how the APRs are factored in. Like the APY on top, that's what you're getting in the stablecoin or whatever that coin is you deposit. And they do fluctuate from time to time. So just keep in mind, don't make it like bread and butter. Like, this is like what it is. If I don't get any more, then I'm going to be mad. I can't do it. Da, 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 da. No, don't place all your bets on it by making like 1%. I mean, at that point in time, it's just a lot of risk right there. You want to factor in, you want to be able to make multiple percentages. So the risk reward has to be worth it to do it because you're taking on smart contract risk. Now, when you look at the APYs, you're like, oh, and also factor in gas fees. Now, when you're looking at the APRs and APYs, look at the bottom one. So this bottom one is paid in the Ponzi token. So it's not always the case that a protocol is going to pay you to use it. It's pretty common right now that the protocol is paying to use it. So in this case, it's paying an APR in Geese. Now, what's important is this APR is fluctuated based on the price of Geese. So if Geese was to double from here, this APR would double from here. However, if Geese was to go in half from here, this APR would be cut in half. So technically the yields you would have earned were cut in half. So that's something to keep in mind with these. But again, same junk, different day. You can take these stable coins or whatever you borrow, use them in DeFi and earn a higher yield. It's basically taking on a quote-unquote leverage position to farm with. It's different than leverage trading. Leverage is good in a scenario if you know what you're doing with it. Like, for example, in real estate, this is a real life thing, what you can do. Very risky. Like, don't get me wrong, this is super risky. But what you can do is you can get a house, you own it free and clear. Or if you own it, you can get a mortgage against it. You take that money, you can buy another house. And then that house that you find, you fill it with the tenant. And the tenant starts paying the rent, you're paying down the mortgage, you get a mortgage against that house, you buy another house with it, the tenant starts paying rent over there, now you got income coming from that house, income coming from this house, and you're living in this house, so you're basically living it in for free because the mix of the two incomes are finally paying that off, so you get a free house or you get free living expenses here, eventually paying it off because you're paying off the mortgage. These two houses, the tenants are slowly paying them off. So those two houses are nice. And then eventually I can get a mortgage against this new house I just bought. Take that money, go buy another house. Now that house is bringing in money from another tenant. Now the tenant is quote unquote actually paying off that house for me. I'm taking that money and now it's profitable because, well, instead of, paying the bill at my house, now they're actually paying me. My expenses are paid for. So now I'm making a little bit. And now I can take that income I'm starting to earn, buy a new house, get a mortgage on this new house I just bought. Now I can take that money, buy another house, earn more interest, as in like earning more rent from another house. You guys get the point. And eventually I have a bunch of houses. And then after 20, maybe 15 years, maybe 25 years, depending on how successful it is, I get all these houses free and clear. And that's not even factoring in the appreciation of real estate. Say, for example, real estate doubles. Well, now that's awesome. I mean, the debt I owed is whatever the dollar was back then. Everyone knows the dollar 10 years ago costs, or well, can buy way less than it buys now. It's literally worth less, like literally worthless, but it is worth less than it is now. You know, worthless. That's a meme itself. But anyways, guys, you get the point. That's real world DeFi and real estate. Also, you guys are asking what I'm going to add on this channel, bear, bull market, etc. I still will talk about crypto, but in a bear market and I guess you can say diversification, I'm going to start doing some Discord videos as well, talking about like different real estate strategies. Basically, how you can own a house with no money down. It's called assignment of contracts, but for a later market. That's for when we're not in a bull market having a bunch of fun. But anyways, guys, make sure you guys stay diversified. Just wanted to make this video for one of our members over at Discord. And if you guys want to jump in the Discord, links in the description below. Hope you guys enjoyed that video. And let's go ahead and leave you guys with a wisdom one-liner. Proverbs chapter 17. No, I'm sorry. Proverbs chapter 15 verses 19. The way of a sluggard is blocked with thorns, but the path of the upright is a highway. That's how it rolls, baby. I like that. I'll take that junk. Anyways, guys, links in the description below. If you guys want to know what Discord's about, basically we talk about alpha. We talk about different crypto projects. My thanks, and thunks on the markets and what I'm doing in the crypto markets. And, well, some private videos I talk about over there that I don't really publish on YouTube. And there's some referral links in the description below if you guys want to sign up for Voyager, Celsius, BlockFi, whatever. It's in the description below. We'll see you guys in the next one. Y'all guys can also catch me on tweeters. It's at Rent a Home Fast, like literally at Rent a Home Fast.